A new requirement being introduced in STP Phase 2 is reporting an income type for each payment made to an employee, and in some cases, a country code alongside that income type. This video will provide an overview on the new reporting requirements for income types and country codes. Please refer to the video description for a detailed article on the subject. The three main drivers of reporting income types and country codes are as follows: to identify amounts with specific tax consequences and/or mapping to a specific part of an individual's income tax return, to easily identify any payers choosing to claim an STP reporting concession, such as closely held payees, clarifies the employer's reporting obligations with respect to foreign tax and whether there are any applicable tax treaties in place with a foreign country. Preparation for users. The main preparation required for these changes will be to 1. Review income type definitions to know what to assign to employees if required. 2. Obtain the visa country of existing working holiday makers. 3. Review locations assigned to foreign employment employees. Reviewing income type definitions. To ensure the correct income type for each employee is being reported, we are adding new settings to the employee's pay run defaults screen. When these new settings are made available, users will be able to commence updating an employee's record as required. We will discuss the new income types in more detail later in the video. Obtaining the visa country of existing working holiday makers. When reporting working holiday makers through STP Phase 2, the visa country of the working holiday maker will also need to be reported. Reviewing locations assigned to foreign employment employees. Employees classified with an income type of foreign employment will also be required to report on the host country. This will be configured through locations and caters for potential multi-country work. This change allows the earnings paid to employees to be reported against the country of the location specified. For businesses with foreign employment income type employees, we strongly suggest reviewing the locations set up in the business to make sure that 1. Separate locations are set up for each non-AU country where employees work. 2. Non-AU locations are separated by country. And 3. Foreign employment income type employees are assigned a primary location that is specific to the country they work in, and if such employees are required to submit timesheets, they are submitting timesheets for locations specific to that country of work. Configuring income types. Closely held payees or employees. An employee who is directly related to the entity from which they receive payments, such as family members of a family business, directors or shareholders of a company, or beneficiaries of a trust. From the employee's pay run defaults page, scroll down to where you see STP income types. Select closely held employee, and a subsetting option will appear that must also be selected to indicate whether you want to report the employee on a quarterly or per run basis. Please note, existing employees already classified as closely held in the platform will not be required to be reconfigured. Inbound assignees to Australia. Some multinational employers transfer employees between affiliated entities in different tax regions. This income type refers to an employee that is employed by an offshore entity and is seconded to work in Australia, where all or part of their base salary and other remuneration is paid by the offshore entity. To categorise the employee, select Inbound Assignee to Australia from the STP Income Types drop-down here. Employees classified as inbound assignees must also be linked to the home country of the foreign offshore employing entity. Instructions on how to do this are at the end of the video. Working holiday makers. Foreign resident employees working in Australia on a visa subclass 417, working holiday, or 462, working and holiday. To identify the employee as a working holiday maker, tick the Is Approved Working Holiday Maker checkbox in the employee's tax file declaration page. The business also needs to be registered as an employer of working holiday makers. Employees classed as working holiday makers must also be linked to the home country of their visa. Seasonal Worker Program. Employees engaged in regional programs for government-approved employers, administered by the Department of Employment, Skills, Small and Family Business. The detailed article will advise which schemes are not included in this setting. An employee is identified as a seasonal worker when the "is a seasonal worker" checkbox is selected from the tax calculation options in the tax file declaration screen. The business will also need to be an approved employer of the seasonal worker program. Foreign employment. This income type relates to assessable income paid to employees that are employed by an Australian entity and who are Australian tax residents, where such income is subject to tax in another country for work performed in that country if the qualification period is met. The employer must pay or be liable to pay the foreign government for the tax to qualify as foreign employment income. On finalisation, the income type must include an amount for foreign tax paid. If no foreign tax is paid or payable by the end of the financial year, then the income should be reported as salary and wages. Employees classified as foreign employment must also have their income linked to the host country of the foreign country where the employee is working for the qualifying period. If the employee meets the qualification period for more than one country in the financial year, each country's year-to-date amounts must be reported against the income relevant to that host country. Labour hire. This income type relates to payments made by a business that arranges for persons to perform work or services directly for clients of the entity. This pertains to income for contractors only, not employees. Other specified payments. This income type relates to individuals who receive any of the following payments as specified by Regulation 27 of the Taxation Administration Regulations 2017. 1. Payments for tutorial services that are provided to improve the education of Indigenous people and are financially supported directly or indirectly by the Commonwealth. 2. Payments for translation and interpretive services provided for the translating and interpreting services, also known as TIS, conducted by the department administered by the Minister administering the Migration Act 1958. 3. Payments under a contract to an individual engaged as a performing artist to perform in an activity in which the individual endorses or promotes goods or services, or appears or participates in an advertisement unless the individual is engaged primarily because he or she is a sports person. And 4. Payments of Green Army allowance within the meaning of the Social Security Act 1991. Salary and wages. This income type relates to assessable income paid to payees for work performed in Australia other than that included in the other income types. This includes income paid to Pacific Labour Scheme workers, company directors, office holders, religious practitioners, and death beneficiaries. There is no specific setting that users need to configure for this income type. Rather, the system will recognise and report this income type automatically. Additionally, there is no requirement to assign a country code to this income type. Voluntary agreement. This pertains to a written agreement between a payer and a contractor payee to bring work payments into the PAYGW system. The payer does not have to withhold amounts for payments they make to contractors. However, the payer and a contract worker or payee can enter into a voluntary agreement to withhold an amount of tax from each payment they make to the contractor. The contractor must have an ABN and is an individual person. Please note, this income type will not be supported in this payroll platform. Assigning country codes. Where income involves other tax jurisdictions, the income must be provided for the specific country for that tax jurisdiction. Australia has tax treaties with many countries to reduce or eliminate double taxation caused by overlapping tax jurisdictions. New treaties are formed regularly with foreign countries. Since September 2018, the ATO receives and exchanges financial account information with participating foreign tax authorities. As such, specific income types must report their year-to-date income by country code to assist Australia to meet its international commitments. The following income types must report a country code against their earnings. Inbound assignees to Australia. The country that must be reported for this income type is the home country of the foreign or offshore employing entity. Because this income type relates to the employing entity of the employee, the country is assigned at the employing entity level as opposed to the individual level. Where a business only has one employing entity set up, and this entity is recorded in the business details screen, select the "Is this a foreign overseas entity?" checkbox on this screen. When this checkbox is ticked, you'll be able to select the applicable country from a drop-down list. This will automatically assign the country code to all earnings associated to employees employed by this entity and linked to this income type. Where a business has multiple employing entities set up within the one payroll account, and the foreign entity is set up via the employing entities screen, the same process will apply. On the employing entities screen, click on the foreign entity to expand the details, tick the "Is this a foreign overseas entity?" checkbox, and then select the applicable country from the drop-down list. Working holiday makers. The country that must be reported for this income type is the home country as per the employee's visa. This setting is configured at the employee level. To assign the country, go to the employee's tax file declaration screen, tax calculations options section, tick the "Is approved working holiday maker" checkbox, and select the applicable country from the drop-down list. Foreign employment. The country that must be reported for this income type is the country where the employee performed the work. The country code assigned for this income type will be done at the location level. To assign the country at a location level, go to the payroll settings screen and choose locations. Click on the location where the employee's earnings are being costed to and select the applicable country from the country drop-down list. It is essential that an employee assigned to this income type has earnings reported against a location that has a country allocated to it. Otherwise, there will be a validation issue when reporting the employee's earnings through STP Phase 2. Additionally, if there are multiple employees of this income type working in multiple countries, you must ensure there is a unique location created for each relevant country. For more information on STP Phase 2, please see the detailed article in the description and our other videos.